Good morning. It is June the 13th, 2017. Time to kick off another trading day. We'll start with our disclaimer. Hypothetical simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, results may have under or overcompensated for the impact of any of certain market factors, such as lack of liquidity. Simulated trading programs in general are also subject to the fact that they're designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profit or losses similar to those shown. Okay, today is the 30-year auction. At some point today, just like yesterday, we'll see a rally. They can't move the paper in a down market. Now, tomorrow, the FOMC is expected to raise interest rates 25 basis points. What we could see, one possible scenario is a rally starting sometime today up into the auction. Auction hit, auction is done, and then you can see the hedge step in for the 25 basis point increase in interest rates. They're also expected to show in forward guidance one more interest rate increase for this year. So I think we're in a trading range because of the FOMC meeting and the announcement tomorrow. I think we have an upward bias because of the 30-year auction today. So we've got a B in volume, and we've got a B TPO. So we're pointed lower, so stops below 04 might work. So 1 to 5 by 1, 25, 29 by 2. First sell 11 to 15. 19 to 23 for sell 2. We have the NFIB Small Business Optimism Index was out. It came in at 104.5. They're expecting 104. PPI is expected up 1/10. Core PPI up 0.2. And the focus will be PPI, which is a precursor. It leads CPI. So not much in the way of news today. The overnight news was pretty quiet. Panama broke relations with Taiwan. They're now firmly in China's corner. And Taiwan continues to suffer that way. If I were on Taiwan, I would invest in anti-invasion type military equipment, anti-missiles protection. Develop myself with a little bit of help from your friends. Okay, looking at the 30-year, which is where the auction is today. We're going to have support at 24 to 20. So 13 to 17 by 1. And then 5 to 9 by 2. I just don't think they can take it down too far and still move the paper that they need to move. Our resistance is the buck to 04. Sell 7 to 11. I believe we're stuck in a range today because of the FOMC announcement and rate increase tomorrow. So that's the way 15 to 19 will be sell 2. But we had a good trading day yesterday, and on a Monday it was, even though it wasn't all that volatile in most of our markets, the trades were there, and we had reasonably good trade location. Sometimes that's not the case on Mondays. Taking a look at gold. Gold was lower. No reason to own gold, right? Stock market's up. Fed's increasing interest rates. You can get money on your money. Don't have to liquidate assets to get money like you do in gold. So we're headed a little bit lower. We had a 65 buy, basically 60 to 65 buy. We got down to 63. We are pointed lower, the B, so maybe a little bit lower, 60 to 62 by 1. With a question mark at 64. And then 55, 57 by 2. On the sell side, 68 to 70, 73, 75. Looking at the euro, probably on hold or in a trading range the next couple of days till the FOMC speaks. Have a buyer below 112 and probably a seller at 112.50 as it stands right now. So we'll 30 to 40 sell 1, 50 to 60 sell 2. On the buy side, 112 even, 1190 buy 1, 1175 buy 2. Crude oil. Article on Zero Hedge about OPEC's liftings. Higher than official quotas. Higher than last month, I believe, if I remember the headlines correctly. That will be excused away. Oh, we're just storing it above ground. No problem. We have to keep pumping this or we'll lose the well. Haha. So, again, they agree on paper, then they're going to do what they're going to do. As long as they don't get caught. And some of them will continue to do it even if they do get caught. Okay, looking at crude. And it may take a 46 to get in. We'll put a question mark there. 46 and a quarter, 46.50, sell 1. 46.75, 47, sell 2. That's pretty much where we were yesterday on the close. We'll make 45.50, 45.75 buy 1. 45 even, 45 and a quarter buy 2. APIs tonight, EIA inventories tomorrow, and pretty tight trading range. The sells at 46.50, the buys at 45 for those that want to open it up a little bit, not work so hard. And to the E-mini. Traditionally, when the Fed started raising interest rates, and things are just so different these days, you really can't count on this. But the stock market could rally for 6 to 9 months after the first interest rate increase. Why? Because bonds were headed lower. It was the only game in town for those that had to be long, and the money went that way. Wouldn't want to buy bonds because their face value would be going down. Bond prices going lower as the yield went up. So given central bank intervention, it's just really, really hard to say what, if any, kind of impact increased interest rates will have on the stock market. At some point historically, higher interest rates would take stock prices down because you could make more money in the bond market. So right now you're pressed to make much over 2% in yield in the stock market. And as interest rates move higher, people need income. And a lot of people, you haven't talked about it, but the demographics, the people hitting 70 having to take money out of their 401ks at 70 and a half, 71. For the next 10 years, the baby boomers are really going to be impacting the structure in a big way. So my point is, it's hard to know what's going to happen interest rate wise. Okay, we have a P, a double distribution up. We should go for stops above the London high, but we may not be able to. So I'm going to put out a 33.35, sell 1, and then a 39.41, sell 2. And the idea, we're going to have a trading range. 24.26 buy 1. 2022 by 2. PPI is expected up 1/10. Shouldn't be a factor. Core up 2/10. FOMC meeting begins today. They're expected to raise interest rates 25 basis points tomorrow, with forward guidance with one more rate increase for 2017. That's it for our pre-market briefing. Going to take a bit to get everything up and posted. Going to get busy on that. Be back with you as soon as possible.